Good morning, everybody, and welcome to the game plan. My name is Gareth Soloway, coming from the cruise ship somewhere in the middle of the Gulf of America / Mexico, whatever you want to call it. But my goal here is to give you the data and the insights. Even when I'm on vacation, I am here because ultimately I love what I do. I love trading. I love charting. I love probabilities and data analysis. And I love helping you guys. Seriously, man, this is, if I could only have had something that enabled me to think more logically and data driven and chart wise early in my career, I would have saved myself a lot of money in my early trading period. All right, so listen, let's get right into the charts here on this Friday morning. We're going to flip right into the S&P. I always like to cover the S&P first because it gives us a grounding of where the markets are. Then we'll get into individual names here that are moving on earnings and other. Ultimately, what we see here is the market closed yesterday right around this level here, right? But ultimately, again, after hours, it was sideways with a little bit of an uptick and a downtick here and a float back up. So all in all, where are we? We're basically flat in the morning session. So that doesn't really give us much insights, but this is the kicker on a Friday. And this is really important, guys. All right. So listen, today is Friday. All right. By the way, happy Valentine's Day to each and every one of you out there. But if you have all the news we had and the rally that we had yesterday, and you're coming into a 3-day weekend where the stock market is closed. By the way, Monday we are having a major event, Q&A instead of the game plan. It'll be an hour-long trading intensive kind of workshop with Q&A with me and the other traders. So tune in at 9 o'clock on Monday, even though the stock market is closed. But in general, you can expect neutral to upside. Now, it doesn't guarantee we're going to float up today, but again, neutral to upside bias on a 3-day holiday weekend with lighter volume anticipated. All right. So again, we'll see where it is at the end of the day. Right now, we're flat, but again, let's keep it on our radar. Flipping back to the charts here. Going to the daily chart. This is where things get interesting. And I got a lot of huge alerts to give you guys. All right. So number one, yesterday on the S&P, we closed just above this line, which was the high pivot from December. Now, we did that here as well. Notice how they faked everyone out. They closed it above. They never confirmed it. It was never a confirmed breakout. It was what I call a fake out, and they brought us right back in. Here we hit it. Here we kissed it. Here again, we closed above it. So the reason why today is so important is because you have a chance to confirm a breakout on the S&P. Now, when you confirm a breakout, let's be extra super clear. It doesn't guarantee upside. There is no such thing as guaranteed in this market or in any asset investing market. What it does is it raises the probability of further upside. All right. So I always like to stress that is that it's all probability based. Our goal is to get the probabilities as high as possible. And then I take the trades when they are in that 75-80% success rate or better range. That's at least what I try to do. Don't do it well all the time, but nonetheless, I do my best and I can win more than I lose, no doubt about that, as you guys see from these game plans. Okay, so a close above here. If we confirm it, it opens the door and raises the probabilities that we can travel up to this level. By the way, that's not a huge move. That's only about a 200-point move on the S&P. 200 points these days is about 4%, actually less than that, about 3%. So again, you'd anticipate a 3% move, and then I will be shorting the heck out of this market, probably playing those S&P puts, again, if we get up to this level. Now, if we fail to confirm, you look at downside, right? Downside into this level, that will be technical support right there. All right, so that's, again, a major heads up. All right, so that's the S&P 500. The NASDAQ 100 broke above a short-term trend line yesterday. I love this because this shows us a river theory. What's a river theory? This is something that, again, I created probably about 15 years ago now, maybe even more. It explains gaps and runs. All right, so notice how you have this trend line, pivot high right here, resistance, right here, resistance, and notice rejection every time. Here, resistance, rejected. So it's basically coming up to what I would refer to as a river. Okay, this is the river. The trend line is the river. And every time you come up to the river, it's like, oh man, like I could swim across, but I'm going to be so exhausted when I get to the other side that it's just not worth it. I might drown. All these kind of really negative kind of things. And so every time you come up here, you're like, no, I'm going to go the other way. And then you come, no, I'm going to go this way. Here, nope, I'm going to come back. Now you come up this time and you're like, holy cow, there's a bridge. I just over at this area, the river, there's a bridge. I literally can just run over the bridge. So this is the gap above. And then when I get to the other side, I still have a lot of energy to run because I didn't have to swim through this big river, right? This wide river. And ultimately, that's where you get these gaps above, and they tend to rally and surge higher. And that's exactly what the NASDAQ did yesterday, up almost 1.5%. Now, having said that, we are not at an all-time high. We're not even quite testing it yet, but we are getting close. In general, you have to think that we broke above this, we gapped above, and we ran. You probably at least test double top here. This would be a technical resistance here on the QQQ NASDAQ 100 tracking ETF, and that would be at the 540 level. All right, now right now we're at 535.59, so we're still about $4.50 away from that. Doesn't mean we're going to test it today, but maybe we test it next week when the markets resume, or maybe we do test it today. We'll have to watch and see. All right, so that explains that. Now, this becomes minor support right now. If we confirm, it becomes major support. Notice these two trend lines are going to merge somewhere out here. And so if, let's just draw them out and let's just game this out. I love gaming it out, right? So if we take our trend line arrow tool, let's say we come up here and we confirm, and then we back off and we come down here, these two trend lines will now be joined and they will act as major technical support. You could then expect a bounce and either a breakdown after that or a bounce to make new all-time highs. We'll obviously have to kind of figure it out and just take it day by day. And by the way, I think that's so important to understand is that, in general, I can always project out, hey, I think this is going to happen because the writing's on the wall with the US debt and this and that, right? But in essence, every day with the charts, you're getting a new piece of the puzzle, right? Every candle that forms is a new piece of the puzzle, and that gives us more insight into essentially what the probability is for like the next day or two or even the next week. But once you start projecting out, like these analysts that come out and say, hey, I'm going to raise the target on the S&P to 7,000 or whatever by the end of next year, to be honest, it's just more for headlines. And I want to be clear on that is, when I get asked in these interviews that I do and everywhere else in the media, like, oh, do you think that this is going to happen? I'm going to give you my best guess based on the data I have. But there's so much time when you project out a year or 2 years or 3 years that so many things can change, so many new pieces of the puzzle can come in that ultimately things change, right? And then you have to be, as a trader, ready for that. If you're not, if you're rigid and you're like, no, I'm dead set on this happening, well, ultimately the market makes you pay for that, and it makes you pay by costing you money. All right. So always remember that. Couple wise words from many, many mistakes I've made in the history of my trading. All right, let's get into some things here. So let's just quickly look at the 10-year yield. The 10-year yield right here, it is down a little bit on the day. We closed back above here, and now we're right back in. We may confirm a breakdown today. So this has been a lot of whipsaw this week. We broke down. We never confirmed, which means we could break easily above. We did. Now we're back below. Again, any close below today's low would confirm the breakdown, and that would now make this major resistance. It was only minor over here because we never confirmed the breakdown. If we confirm here, this becomes major, and it increases the probability of a drop down to my ultimate target down here. And yes, in smart money stocks and ETFs, I am holding the TLT, which goes up when yields come down. Okay, the dollar, the Dixie here, this did break down. This triggered the head and shoulders. I've been kind of warning you in these game plans that the head and shoulders was there. Here you can see it very clearly. Let me just zoom in a little bit on this chart. There we go. So shoulder, head, shoulder. Once you close below the neckline, that triggers the head and shoulder. And it ultimately, again, as I said yesterday, you still are going to get bounces, but it increases the odds that you head towards the measured move target, which is around 104, basically this area right in here, this sideways area, this kind of shelf area, that would be the measured move target. It just happens to align. You'll find that very often is that it tends to align with levels. Okay, so that's where we are on that front. Coinbase reported earnings yesterday after the bell. You can see again, this is where the stock closed yesterday. This is where it's trading pre-market, so it's down slightly. Again, we can take a look. You can see initially it flushed, then it rallied. Now it's fading a little bit. To be honest, there's nothing here as a technical day trader that's getting me excited because it's just a whole lot of sideways chop. It's even in the kind of within the range of yesterday's price action. So for a day trader, I'm always looking for, what's a huge, massive move up or down, and then where or is it coming into resistance where I could short it, or where is it coming into support where I could buy it? All right. Twilio, let's take a look at Twilio here. Twilio reported earnings. The stock is dropping. This is a decent drop. Yesterday here it closed at 147. It's trading at 140, at 133, well, close to 134. So it's a decent drop. It's not massive. If we look here, though, look at this, guys. This, after initially look at the drop, it went down to 123. What does that tell me? If it falls to 123, that will work as a double bottom from aftermarket. So that might be a day trade. And then also, if we flip over here, there's a major level at 113.50. That's a gap fill. So this creates a big, see this close here and then the gap up. That's what we call a gap. And when price falls into the level where it closed here, filling the gap, essentially gap fill, that is where you will have generally a high probability of a bounce. So I got my two levels, 123 and change, and then basically a little bit 113 and a half, give or take, right here at the gap fill. DraftKings, again, if we take a look at DraftKings, notice you don't see the pre-market because it's up as that much. So if we bring this down, you can see it's trading up at 48.70. If we go to a zoomed out chart on DraftKings, the only level we have here is around 50 bucks. I'm not sure if I'll take it, guys. I'm seeing an inverse kind of head and shoulders potentially here. Yes, that could be for an aggressive trader, a place like even number of 50 to pull the trigger on a short, but just be very, very careful, or at least I'm planning to be very careful in my trading about this one. This one has a tendency to make big moves. And then if we did go above that, let's see, then you have to go all the way back here. In fact, this is where I might do a fib, right? So we take the high here and we drag a trend line down to the low. Notice I'm taking it to the low here, the lowest point, from the highest point to the lowest point, and then I'm just stretching it out, right? So that goes there. So actually interesting that 50 was a 618 right there. If it gets above that, honestly, you could easily trade in the next few days or weeks up to 60 and maybe even this pivot high at 64. So suffice it to say, I'm not loving shorting this, especially on a Friday of light volume. I think it's again a little risky. All right, Palo Alto Networks came out announcing earnings. This is where the stock closed yesterday, 202, trading at 195 and change. Small drop. The only level I have here is 187. There's a gap. See this gap right here? So it would fill right there at 187.35 or so. That would be a little bit of a level. Aside from that, I don't see much on this chart. Applied Materials. Closed yesterday at 184, gapping down to 175. Again, not a huge gap. The only levels I see on this one, you'd have to go back here. And again, I want to show you the pre-market and after hours. So it did get as low as 173, but it stayed kind of in that lower range. So that's good. So I wouldn't play a double bottom on this. Notice the difference here, guys. On Twilio, all right, on Twilio's pre-market, this had a big flush and a massive bounce. That means the double bottom, when you have a big bounce and a long distance between hits of that double bottom, it increases the odds that this will be a bounce level. All right, now if we go to AMAT, Applied Materials, yeah, you have a double bottom, but look, you haven't gone very far away from that. I mean, this is more of a bear flag formation, so it likely could break even lower and you wouldn't play, at least I don't play those double bottoms. They're low probability versus the other. Now, going to the daily chart, if we look at this, there's a couple levels here, folks. So for aggressive traders, you have the 170 even number, and then followed by this little pivot low right here around 168. I'm going to be eyeing two lower levels, which one will be right in here, right around 162 if it really flushes that low, and then same thing down to about 159 and a half. So this would be my zone where I would probably start to accumulate for a day trade bounce if it flushed all the way. Airbnb gapping up majorly, and you can see again no pre-market little marker on the side of the chart. We have to go and zoom out. This one actually is having a big move. This is a big move, about a $20 move on Airbnb. And so Airbnb is doing very, very well here apparently. And really we have a very obvious trend line here. You can see if we take a line here and just draw that out, the 170 level. So it's still about $10 higher, but the way this thing moves, it could get there. 170 would be a major double top. Notice again, here's a double top. It came deep, deep to the downside, and it's been a long time between. Therefore, when it rallies up, this holds more weight versus, again, if we flip it on its head, and price had just gone sideways like this, you wouldn't short double top there because it hasn't come down deep enough. The deepness and the width, essentially the drop and the width, how long it's taken, that is instrumental in making a good trade setup. All right, lastly, GoDaddy, guys. This is a play we have short in smart money stocks. It is getting hit on earnings. Look at this coming down to this low here. It looks like it's going to break lower. Currently, the stock, again, is trading at 196. I do have a level, a zone. I've already annotated out. So here's at 196. This is where it closed yesterday at 212. 189 to 186, this area. So see this pivot top, this level, and then if we zoom out, you have this trend line sloping up, and that merges essentially right around this 189, 186 zone. So when I have two trend lines that are almost meeting and they're kind of a couple dollars apart, that becomes a zone. And again, ultimately something to keep an eye on. All right. Now, I do have some other amazing stuff going on here. So we'll quickly look at Bitcoin, which honestly has been sleeping. I mean, really, talk about a sleeping giant here. I don't remember the last time we've had so little volatility on Bitcoin for the last 10 days or so, just really sideways action. Again, is it forming a bearish pattern? It might be. Even if it does dip, you really don't care about that until it tests the 91 to 92,000 level. If it breaks and confirms here, watch out below. As long as it holds here, it could just trade back up to the highs of around 108 to 109. All right, so just something to keep an eye on there. Next, let's take a look here at gold. Gold, again, is showing signs of maybe still being a little bearish. I know it's been up the last couple of days, but look, the doji, this is a doji, which is a slightly bearish signal, is still holding true. And the nice thing about this is even if it were to break above here, you have this trend line at 3,000 that's going to be epically big in resistance. So yes, I am basically actively shorting a little gold here, still keeping it a little light. But again, this is more of a swing trade. I still have my by the way, I still have my long-term holds on gold. I still have, I still think it's going a lot higher. But again, gold is showing signs that it might be running out of steam only for a short-term pullback for me, not for a long-term. All right, the next one's the exciting one, silver, guys. You remember we talked about how this was now forming a bullish pattern. I talked about this yesterday. And sure enough, look at silver ripping higher here. So now it's breaking out. Look for upside to about just under $35 per ounce. And again, one of the stocks that I'm liking here, so AG, which is First Majestic Silver, this one's already at $6 after closing at 570. So that's tough to pay up, even though I love this pattern. I love this pattern, and this one could go a lot bigger. The one I really like is SBSW here. You can see have a down sloping trend line, broke above, moved up, bullish pattern. Now, I think this should go up. First resistance 435, trading at 394 right now, but eventually I think it goes up here to about 487. So this one to me is one I do like. And again, you can see this longer term parallel where I think it wants to test or could test this upper level here on SBSW. So again, that's SBSW is the symbol on that one. So yeah, keeping an eye on it. Yesterday I mentioned Wolf and talked about that. We talked about that. That one did have a nice pop. Love seeing that. Traded above $6, but it still hasn't tested. This is going to be your resistance line. If it can break out of this handle channel, then that's where it gets a bigger run. But again, beautiful move yesterday. I think it was up about 15% on the day. Couple other things to go over here. Let's go over oil real quick. Oil is small, getting a small bounce. You can see how this trend line's holding it, got below, then back above, then down, then pierced, then back above. That's fine. I'm not in a short here anymore. We took our profits, all good and dandy there. Now, having said that, natural gas, I did pull the trigger on a short here with smart money commodities and ETF members. Beautiful move right into this level. Look at it, got up and got hammered back down. This morning it was even up a little bit and coming back in. I love this as a short here. Looking for downside on natural gas. Doesn't mean I can't be wrong though. Just keep that in mind. I mean, they call this the widow maker for a reason. It can be very, very volatile, but either way, it looks very intriguing to me. And I think for the downside, I think again, parallel channel, broke down, confirmed, retraced to the scene of the crime. It should, probability-wise, it should get rejected and come to the downside. Man, so much going on, guys. So much going on here. Great action here. Tesla, guys, has had a big bounce. Take a look at Tesla. So kissed my lower 321. In fact, pre-market, remember this, guys? In the pre-market, it actually got to that level. Look, I still remember showing. I think I showed this to you guys in the pre-market when we were talking about this the other day. But again, isn't that amazing how pre-market the levels work just the same? And then again, that was this trend line. So if you look at the chart, it looks like it didn't get there, right? You're like, oh, well, during market hours, it never got there. And then you look at the pre-market, you're like, holy cow, amazing. And then look at the rip off that line. That's pretty amazing stuff right there. NVIDIA has been strong here, guys. NVIDIA continues to be right up into resistance, though. If it can break through here, fills the gap down up to 142, but that will be major resistance, 142.50 on NVIDIA. Okay. Other than that, yeah, I mean, I think it's just more getting into the action. I'll be trading it in the Apex Live day trading room. Don't forget on Monday, guys. Monday markets are closed, but we will be doing a special event here at Verified Investing. Special event that essentially we're calling it Get Smart, essentially smart with investing by using probability and data. We'll be teaching, we'll be going over charts, we'll be taking questions. It should be fantastic. It'll be a full hour. It'll be only viewable on our website. So verifiedinvesting.com. You're going to have to come to there. It'll be on the homepage. And again, you'll be able to type in questions to us, etc. So really exciting, guys. And as I always say, I hope my mistakes in the history of my trading and the learning that I've had to do. It's cost me a lot of money, no doubt about it, in the early years of my career. My goal is to ultimately let you guys understand this. These are a lot of institutional secrets that the institutions use. And by the way, the institutions don't buy on rumor. All right, they buy on data. And that's what I'm trying to show you guys is that the charts enable us to make educated, logical decisions based on buying, bull flags, gap fills, topping tails, all these things, which tell us something. And if we can just focus on that and almost shut down that emotion, the idea is we should be able to have a high win rate in trading and investing. And that's really, again, the goal is to kind of step up our game to the institutional level and start making the money, and instead of letting the institutions bully us around and creating that FOMO that people fall into, and then it's the top, and then the bottoms where everyone's panicking and dumping and crying, and then that's the bottom and it starts going up. I mean, again, if we can learn to control emotion and follow charts and data, we can do well. All right. You guys are awesome. Thank you so much, as always, folks. Thanks for sticking with me during this cruise. Always awesome to have you guys tuning in. I'll talk to you soon. Take care.